So here's how I made 54% in 3 weeks with a Netflix option trade. So this is a real 54% in 3 weeks, and it's using an option strategy called an iron condor. And as you can see here, it was placed on March 15, and I just closed it today, so exactly 3 weeks. And this is an option selling strategy, meaning when you first open the trade, you're actually collecting a premium, you're actually getting in a credit, and then you have the opportunity to either let your options expire worthless, or you can buy them back at a smaller price. But of course, there's a risk you might buy them back at a higher price as well if the trade doesn't go as expected. Before I quickly explain how an iron condor works, let me just show you how much was collected from this trade. So I collected 511. I paid 387, and then I collected 468, and I paid 372. So that's $220 that I collected by first starting this trade, minus fees about $8, so $212 that I collected. So how this trade works is basically, if we look at Netflix, let's look at the past 6 months. Now, I don't know which direction Netflix is going to go, or at what, or which price it's going to be at in 1 month or in 2 months. But I can make a fair assumption that in 1 month, it's highly unlikely that it's going to be above $400, and it's highly unlikely that it's going to be below $320, for example, in 1 month. So it's easier to guess that a stock will trade within a certain range than to guess the direction of a stock, whether it's going to go up, whether it's going to go down. It's also easier to guess where a stock won't go versus guessing where a stock will go. So that's the beauty of this iron condor strategy. So when I first placed this trade, it was March 15. So let's go see what the stock was trading at March 15. So on March 15, the stock was trading at 361. Today, it's trading at 361. So that's a pretty funny coincidence. So when it was trading at 361, I said to myself that there's a pretty good chance that come April 12th, which is the expiry date, as you can see here, come April 12th, the stock is not going to trade below 340, and it's not going to trade above $382. So these were the strikes that I sold. The 382 call I sold, and then the 340 put I sold. So basically I'm saying, I don't want the stock to drop below 340 come April 12, and I don't want the stock to go above 382 come April 12. And then to these two options that I sold, I have to add protection. So the protection here is buying the call at 387.5 strike and buying the put at a 335 strike. So this basically protects me from the stock actually going way past my short strikes. So if the stock goes to 400, if I just had the 382, if I had just sold the 382.5 call, then I'd be in big trouble buying back the option, because this is an option that I sold initially. By buying a call and buying a put at the same time, it adds protection, it adds a maximum risk or a maximum loss that I can make with this trade. And the maximum loss is the difference between the strike prices. So $5, and as you can see here, it's $5 as well. So the maximum loss is the difference between the strike price minus the credit that I collected. So I collected $212. So my maximum loss for this trade is $288. So that's my risk. And this would occur if the stock is trading above 387.5 come April 12 or below 335 come April 12. Now, an iron condor sadly cannot be traded in a register account, so you can't place this trade in a TFSA or an RRSP. It has to be a cash or margin account, so it's going to be taxable and it's going to be 100% included in your income, not 50% like capital gains. But given the yield you can make, it makes it really worth it, because I only risked $288 and I collected $212 out of it. Now today I bought back the option to close it. So when I first opened the position, I sold it, collected $212, and today I closed it at $38. So 212 minus 38 leaves me with 174 minus $8 of fees. So I made $166 of profit on a risk or an investment of $288. So about 57% in 3 weeks. Now, yes, it is just $166, but I can place several of these trades, always risking a small amount, but yielding a high return, either from 20 to 50%. So in this case, it was 57%, but in most cases, it'll be around 20% because these strikes were actually pretty close to the current market price at that time, which was 361. It was only like $20 apart. So I actually placed another one on Netflix, but I went a bit wider just to be safe. And obviously, because I went further, I collected less. So as you could see here, I went with a $400 strike and a $325 strike. So basically, I said to myself, when the stock was trading at 361, it's unlikely that the stock will trade above 400 come April 12, and unlikely that the stock will trade below 325 come April 12. So I went wider, and in that case, I collected less. I think I collected about $81, I believe. Here, let's calculate it. 56 minus 40 plus 222 minus 168. So $70. So I actually collected $70. And what is my risk? Well, my risk is the difference between the strike prices. So 405 minus 400 is $5. And it's the same thing on the other side. So because come expiry date, the stock cannot be in two different positions at the same time. It's either going to be above my $400 strike or it's going to be below my 325 strike. So my risk is the same because the stock can't be in two different places at the same time. So I chose the same difference, the same width between the strike prices, which is 5. So my risk here is $500 minus the $70 that I already collected. 500 minus 70, $430. So in this trade, my risk is $430 and my max profit is $70. So $70 divided by 430. So this trade is about 16% return, but it's a much safer trade. It has a higher probability of success since the strike prices are wide apart from the market price. So it increases my chances of being profitable or successful on that trade. All right, so if you have any questions, leave them in the comment section below. I'm also starting a WhatsApp group for anyone who wants to join to get trade alerts. I'll be sending out my daily trades as I place them, and any stock recommendations I would buy myself. So basically, it's for anyone who wants to get alerts on the trades that I make as I make them the same day, instead of only hearing about them either the next day on YouTube. I'm starting the membership at $10 a month. So if you're interested, link will be provided below, and you can obviously cancel at any time. So as I place a trade live, it's not always possible to make a YouTube video right away, but I can easily take a screenshot and send it to the WhatsApp group. And of course, just because I make a trade doesn't mean you should go ahead and copy it, but it helps, gives you ideas, and you should do your own research. If you think the trade makes sense, then go ahead and do the same thing. I don't think there's anything wrong by sharing trades and helping each other become more profitable and grow our investments. Like always, if you can open an account with Questrade, use my referral code in the description below the video to get up to $250 back. And it's not too late to do your taxes. So if you're looking for an accountant to do your taxes, don't hesitate to message me. Link will be provided below. Thanks for watching.